Okay, so just to kind of quickly review then our travel expenses, and then we'll move on. Here's the classifications again. I'm sorry, can you hit the lights? Primarily business in the U.S., primarily business outside the U.S., and primarily pleasure anywhere. So quick review of these. You're allocating always the travel expenses between business and personal. Really the question is, do you get to deduct your flight? And if it's primarily a business trip outside of the U.S., you have to allocate it. But if it's primarily a business trip in the U.S., you get the whole flight. That's the big difference. And if it's primarily a pleasure trip anywhere, you don't get to deduct the flight at all. And then you always allocate meals, entertainment, lodging between business days and pleasure days. So really the big differentiation here is the first bullet. Okay, per diem. So I've got a client who she's a weaver, and she's got a job during the school year, and then she's a interpreter, and then she weaves with her hands. So obviously her gift is doing things with her hands. So she goes and she travels all summer and takes her weavings to art fairs, craft shows, right, festivals, and sells her weavings. And it's a lot to keep track of all the documents for when you travel, 80 days. So we just take per diem for her. There's 3 ways of doing per diem, and per diem is just like, here's just a set amount per day. Rather than keeping track of every time you go through the drive-through and spend $5 on, well, they call it food, it's not really food, but it's saving those receipts, then people get tired of doing that. So let's do per diem. 3 different ways of doing per diem. I'm going to go through them, and then I'll tell you what I usually use because it usually ends up most beneficial. The first one is just a federal rate method. They put everything into one number: lodges, meals, incidentals means like laundry, and I think that's basically what incidentals is laundry, tips. And you get a federal rate is specified every day, but it's these extensive tables. Were you in Birmingham, Alabama for one night? And then you went over to Gainesville, Florida for a night? Each area has a different rate. Okay, so it's 100 pages in the Internal Revenue Code. So for my gal, Amy, it's not really that interesting to me to spend time to go look up, 80 different places. I had a gentleman that was a musician, and he traveled all around Europe one summer, and that ended up being a lot more beneficial to look up, how much is Berlin, how much is Marseille, how much is, Vienna. That ended up being much more beneficial to him. But for Amy, that's not really worth it. So this is for people that go, like, I go to Spokane 3 nights a week, every week, right? I can go pick that up pretty easily. High-low method basically says everything in the country is specified as a low area, and they're given a rate of $170 a day. So if I go to Spokane, it's $170. If I go to Ellensburg, it's $170. If I go to Rexburg, it's $170. But if I go to Salt Lake or Denver or Seattle, it's specified as a high area. So everything's considered low unless it's on a list of high. And the high areas are just what you would think. They're urban areas.
What about like the cost of living allowance?
One more time.
Cost of living allowance?
This is kind of a cost of living allowance, but it's called per diem. I mean, it's really the same thing. Or are you talking about being paid a COLA?
You got being paid.
Ah, okay. What do you guys think? So, like, stewardesses make, whatever they make, and then they get, $88 a day for food. And I tell you, I've known a couple stewardesses. When I lived in Denmark, I worked at an international hotel, and they flew between Japan and Copenhagen, and these gals did not spend their $88 a day on food. They love the fashion in Europe. That's what they spent their money on. Does it show up on W-2s?
I know what the cost of living allowance is for some people, like in the military, that get deployed. They'll change their address from one place because they'll get like $3,500. They
Right.
claim an address in New York City.
Yeah, right. Certainly. Military has so many different rules that I'm not gonna comment on that particular situation, but well, COLAs are taxable. If you're getting $88 a day for food, that's showing up on your W-2. That's not exactly what we're talking about here. What we're talking about is how much can I write off a day for my travel. So what's the benefit of the high-low method over the federal rate method? Just from a
Larger amount.
I'm sorry.
It's a larger amount.
Well, it can be. It depends upon where you travel.
It's easier to calculate.
It's way easier to calculate. Bottom line, I mean, I bill out $110 an hour, so the question is, how much time do you want me to spend on your tax return seeing if I can get you another $400 deduction? $400 times 28%, your tax rate's going to save you $112 on your tax return, and I spent 2 hours doing it. Do you end up ahead? You know, obviously. So this is really easy. People travel a lot. High areas are cities. Everything else is a low area. But if you choose this method, you've got to do it all year long.
So that one isn't one that you have to stick with forever?
No,
For
it's just
tax
during
year.
that year, that tax year. Good. Per diem eliminates the necessity of keeping copious records. You don't need to keep all your little chits and slips. And the rate, but you do, if the IRS comes back and audit you, what I do make Amy do is she keeps a calendar when she travels. Because if they come back, they're going to want to see, how do you prove where you were and when you were there? And just even handwritten notations in a calendar is accurate enough. And the rates are split into meals and lodging. So they give me that $170 a day because she mostly goes to low-cost areas. I can't remember, I think 55 of it's food, and the other 115 is lodging. So the 55 I have to do what with? She only gets 50% of that. Okay, let's pull our Schedule C. I want you to tell me where you think travel goes and where you think meals and lodging go, or meals and entertainment. Geez, I haven't even found my Schedule C. What page am I on?
I'm
3-9 is the Schedule C. And yes, 24B is where the meals and entertainment go. Is that before or after the 50% cut? After, because it says deductible, doesn't it?
So she gets to write off like $27 a day.
Yes. Yes, exactly. And then the travel is the lodging portion. And then the cost of driving her car to and from her festivals goes on line what?
Maybe on line 9.
9. And how do I decide what to take for her travel back and forth around the Northwest during the summer?
50%?
I'm sorry, not the cost of her car.
So that's
Oh, the percent of business use?
Definitely personal versus business use. Now, she's in a situation where she has a special vehicle that she drives to festivals, so it's 100% business use. What are my choices?
Wouldn't you use actual?
Actual versus standard. Actual versus standard, and I'll tell you, at 56.5 cents a mile, the standard turns out better for her. So that's what I take. So the car, the cost of driving her car, Perry wanted to clarify, is that in here? No. The cost of driving your vehicle is not in here. This is lodging, meals, and incidentals. So tips, laundry, cost of sleeping somewhere, and eating. That's it. Okay, or your third method is called M&IE, meals and incidental expenses. This is you take actual lodging and get a per diem for meals and incidentals. Why would you do that? Actual lodging and then per diem for meals and incidentals. Yeah, maybe, but it's usually, it's what?
Maybe where you're at is really expensive.
It's for people that like to stay at nice places. I'm not interested in staying in somewhere for $115 a night. I stay in 4-star places So I want to take my actual lodging, but I don't want to hold on to all my receipts for my taxis and my tips and my meals. So then I'm going to get, again, a high-low 65 or 52. Do you get all of that? No, 50%. Anytime I give you a meals number, whether it's per diem or actual meals, you always have to multiply by 50%. Make sense? If you're self-employed and you elect a per diem method, you have to use this one. If you're self-employed and you elect a per diem method, this is the one the IRS mandates that you take. Pardon me. Where do you get these rates? IRS.gov. And go into the little, search engine and put in, per diem, and you're going to get a whole booklet. And sometimes, like in periods of inflation, rampant inflation, they'll change the rates often. Entertainment. 50% of the cost of entertainment has to be before or after a meeting or a business activity, which basically requires making sure, like if you're the controller or you're the accountant or the bookkeeper for a company, that anybody that's traveling on a company credit card, that they, when they get their receipts from, we went to the Broadway play right after we had the business meeting on Wall Street, that you write down what it was, who you met with, and what you talked about. Okay? I don't care if it's even true. Just write it down so that I've got documentation as to why I'm writing it off. I will tell you, your meals and entertainment write-off on your Schedule C is a hugely auditable area. You've got to make sure that's in check. I will have clients come to me like, I lay flooring for a living, and, I grossed 30 grand, and I want to write off 8 in meals and entertainment. Well, sorry, that's not going to work. I go out with clients maybe 8 or 10 times a year, tops. My clients are all my friends, generally, or work acquaintances, or people through my husband's work acquaintances, blah, blah, blah. So about once a month I feel like I can get away with. I'll go out with Sarah, she's my friend, she's my tax client. We go out, we have a little something to eat, a few drinks, and I'll write off, $50. Okay, great. If I did that 4 times a week, no way. I would be red flag because I don't make that much in my tax business.
I might have missed this when you said it, but when you say you'll write off $50, is that the whole amount that you spent that night, or is that just 50%?
I always start what I want from my clients as the total number, and then I know that when I put it in the software, and you'll see this, you put in the total number in the software, and it pulls the 50% out.
Okay.
And you put your meals and entertainment together. Associated with costs of a specific business purpose and must occur immediately before or after a business discussion. Can you take a client golfing and write it off? Sure. Can you take a client, out boating and write it off? Sure. Does it have to be ordinary and necessary? Yeah. Is that subjective? Of course. Okay, educational expenses. You've already taken a little bit of a look at this. Where do our higher ed expenses, where can they show up? There's a couple different places we've already seen.
The Hope Credit?
It can be, and what's the Hope Credit called now? What's its new name? American Opportunity Credit, right? You get that for 4 years, first 4 years.
Most of it is the same thing.
The Hope Credit is the old name for the American Opportunity Credit. You used to only get that for 2 years. And the Hope Credit migrated to the American Opportunity Credit, which was one of Obama's educational assistance programs. You get it for 4 years.
When did that change from 2 to 4?
Oh, God, well, whenever Obama came in, 08, 09, somewhere in there. It was perfect because it was right when my kids started school.
Because our tax guy last year, I swear, I thought it was only 2 years.
4.
Okay. Getting their knees broke.
My money's on you. Super quick story, just because it's kind of funny. Not really, but kind of. we had a gal manage some property for us, and she absconded with a lot of the money. And we went and pulled an envelope out of the mail one day, and anyways, she stole about $6,000 from us. So I'm down at Alan Vic's. I know I'm taped. It's probably not good. Later that week on a Friday night with my girlfriend, and it's pretty late, and I see one of my tax clients, midnight, and I say to him, this lady, and I tell him her name, stole $6,000 from us, and it's a lot of money for us, and we're really distraught. And he goes, I know her. He goes, you want me to break her legs? Very seriously, he said this. I'm like, no, I just want my $6,000 back. And I was like, I think there really is a subculture of people that do that. I thought it was just the movies. He wasn't kidding. Pretty sure he wasn't kidding. Just want my money back. That's good. Not a violent person. Okay, anyways, complex areas. So we can take the credit, the American Opportunity Credit. Once you're done with the 4 years, you have another credit called the Lifetime Learning Credit that you can take forever. Forever and ever and ever. 20% up to 10 grand a year. So if I want to go back and study for my doctorate and I have to pay for it, or I want to go to law school, or I want to, learn how to code HTML, I get 20% lifetime learning credit on those dollars. Okay?
What's the American one called again?
American Opportunity Credit.
Not on the
It's up to 2,500, but in the case that we did, because of the math, we only got a grant. This is complex. I will tell you, education credits are complex. Then we saw something else. Remember we had to launch that optimizer? Where else could our education credits possibly show up? Tuition and fees. Where is that?
Amended for you, it's 934. The form is 8917.
Oh my gosh, you're one of those people that just kind of remember this stuff. Oh, you're looking at it. I'm like, no, because I've got a little bit of that photographic memory where I can just boop, 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 but
That's my husband.
it's a weird thing. Tuition and fees deduction is a deduction for AGI, right? I wouldn't have been able to tell you what form it went on or what line it was on, but I know where it shows up on the tax return, which is a deduction for AGI. And so you have to launch that optimizer to have the software do all the calculations. Okay, what do you get to deduct? Tuition and fees, obviously, except for not all your fees. You can't deduct fees for health care or sports or recreation. So if you've ever taken a good long look at what you pay the University of Montana, there's a lot of little fees in there, aren't there? Some are deductible, some aren't. So if you've got a good tax preparer, they're going to want to see your 1098-T, which is your tuition statement. Now, if you travel for your education, I got my second master's in Seattle. I had to get on a plane every frickin' month for a weekend and fly to Seattle and then take a ferry to Bainbridge Island and then stay at Islandwood for 2 nights. It was the cost of getting my second master's. I got to write that off.
50%.
No, all my lodging and all my travel, but only 50% of the meals and entertainment. Here's the scoop. It must be paid to meet the requirements of the taxpayer's employer, law, regulation, or to maintain or improve existing skills. So if I'm a dentist and I'm going to law school, nope. I was a professor getting a second master's in an existing discipline that expanded my capacity. Yep. If I was a professor, if I was me going to law school, nope, because it qualifies me for a new profession. So here's the key right here. It's got to be paid to meet either the requirement of the taxpayer's employer. I mean, if the University of Montana came right now and said, everybody that teaches at this level, which actually a lot of people think might be coming, has to have a doctorate, then we would all need to go get PhDs that don't have them. That would be to meet the requirements of my employer. If the law says you've got to do something, you're a nurse and now you need to be, every medical professional in this country has had to go through what are they called? EMS, the new medical records training, right? Or to maintain or improve existing skills, which is the example I'm giving you. I expanded my capacity as a business professor. But it can't lead to a qualification in a new trade or business. If I'd gone and got my master's in biochemistry, no go. It was business related. Okay, and let's see where education expenses show up on our Schedule C. It would be if you're self-employed. Where does it go if it's on your Schedule C?
Is that your commission?
Actually, I'll save us some time. Yeah, it's on other. The very last line item in your Schedule C.
So, so on the whole cost of course is lodging costs.
One more time.
So when you say that you get lodging costs, it has, like in all of our case, where we're just students.
Yeah, no. It's if you travel for your education.
What if you relocate?
Then you get moving expenses,
Oh,
which is where does that show up?
it goes on your schedule for years.
It doesn't. Does anybody remember where moving goes?
Or
Deduction for AGI, and yeah, it is on the face here, 1040. Good job. Okay. Educator, we saw with our first gal, Linda, that works at Slumber Elementary, up to $250 a year if you're a K through 12 teacher, counselor, or principal, and you work at least 900 hours. I can tell you, if any of you know teachers, you know that they spend a hell of a lot more than $250 a year on materials that they take into the classroom.
So you can't take any deductions and classes?
No, but I don't spend any money on things for the classroom. What would I spend my own money on coming in here? Yeah, my donuts and coffee during finals week. My niece is a kindergarten teacher in Austin, Texas, and she spends, I'm going to say $50 a week. I mean, their school system's strapped, and you want to teach your kids about farm animals, and you want everybody to have a pig snout or donkey ears. You stop and you get all the cardboard and the string and the hole punch, and you go home and you do that. I mean, that's the bottom line, and that's really where our public schools are at, frankly. Where does this go again?
That's also contains
A deduction for AGI. So I do her taxes. She gave me last year receipts for $2,300. $250 goes on the face. Where does the other $2,000 go? It's an employee business expense,
Oh,
just like driving your car.
so where's that go?
It goes on your Schedule A, itemized deduction.
Oh, and she only does that if,
It's called an employee business expense, and it's just like the example of I drive my own car from job to job. So if say she was a deaf ed teacher, and she went from school to school during the day, we could also write off her mileage, couldn't we? Not from when she left home to her first school, but between the schools. That's an employee business expense. Other employee business expenses, maintaining your licensing. I pay $1,000 a year to keep my CPA. Employee business expense.
but only if you're above your standard of 6,200 when you itemize, right?
Only if you're above your standard deduction do you itemize. Yeah. So for her, she owns a home, so she has mortgage interest, so it is valuable.
Okay.
But if you don't own a house, you almost never get over the standard deduction if you don't have mortgage interest. Unless you're a really big tither. I've had a couple Mormon clients because they tithe 10% of their income that don't own homes and get over standard, but it's really rare. Okay, so here's Roberta. She's a paralegal. She goes to law school at night. Are her educational expenses deductible? She's a paralegal who's going to law school at night.
Yes. No, because she's a paralegal.
But she's expanding her paralegal skills.
But
She
that's
is.
a new-
But is she going to be qualified to be
Be
a
a lawyer.
She's going to be qualified for a new profession. Paralegals and attorneys aren't the same thing at all, are they?
She would be though if it was.
Yeah,
I always
yeah.
thought that they work, because they work together.
She would be if they.
They're not.
She would be.
It's the same thing as being a paraprofessional in a CPA firm, which is what you guys are trained to do. You should all be able to walk into a CPA firm and be a fully supportive bookkeeper for a practicing CPA. But if you went then to get your bachelor's and your master's of accountancy, that qualifies you to be something different. A CPA is not the same as a paraprofessional.
It would be though. It would be though if her employer said you need to go through law school to.
Keep your job. Yeah, we now are outsourcing all of our paralegal positions. Good point. We're outsourcing all of our paralegal positions to Bangalore, India. But we love you and we think you have tons of potential with this firm. So in order to stay here and maintain your position, you need to get your JD. Well, you've got 7 years of school in front of you. You got to get your bachelor's and then your JD. Okay. In the first scenario, okay, and then I said, what if Roberta flew from her home in El Paso to a continuing ed conference for paralegals in Dallas if 30 hours a year of continuing ed is required for paralegals to maintain certification in Texas? Well, clearly that's deductible. We also get to deduct dues, subscriptions, and publications, and on your Schedule C, that's also going to go under other expenses. And I'll just tell you right now, this is the terminology you use on the line item. You don't say subscription to the Journal of Accountancy or dues for the internet. It's just dues, subscriptions, and publications. That's the classification that goes on the line item for other expenses. And you can deduct anything that's related to your profession. Now, let me ask you a question. I pay $1,000 a year to maintain my CPA licensure. I subscribe to a couple journals. I pay for access to the internet at home. Do I take those to my Schedule A or my Schedule C? Because I'm an employee here that needs all those things to keep her job here. But I also have my tax practice. Why? It was a 50-50 answer. You happened to hit it on the head, but you have to know why I did that. Why do I do that? C or an A? C or an A? And I itemize, so that's a non-issue.
Because isn't it part of your self-employment, your practice?
It's all because of self-employment tax.
So you don't have to like figure out how much of, say, the internet you're using for your work is supposed to associated with.
I probably should. I'm not somebody that's ever going to get audited at my income level, but I probably should. I just say, no, I need it all for my tax business. And I can make a strong case for that because I have access to the internet at my place of employment. It's frickin' $144 a year. Let's be honest. It's not a big write-off. But yes, technically. I take it to my C because the lower my self-employment income, I don't have to pay that 15.3% on it. And I will tell you that number adds up really frickin' fast on top of state income tax and federal income tax.
Do you only get to take a portion of it, or do you just pay it all around?
I say my business portion is 70% for the internet. But my Journal of Accountancy and my CPA licensure, that's 100%, obviously. I wouldn't be doing that if I wasn't in this profession. They're not that exciting. And if you belong to like Kiwanis or Rotary or, you know, the Elks or the Moose or the Lions or any of the animal clubs, you can only deduct that if they do significant service work. Special clothing and uniforms only if you can't wear it outside of the workforce. So if I have $10,000 Gucci suits because I'm a bond trader in Wall Street, no, because I can wear those other places. My sister writes off her scrubs. She's a nurse. She doesn't wear those anywhere else. Right? Hard hats, steel-toed boots, specialized equipment, yeah. Business, sorry?
This laundering of uniforms, so when you take your suits to a dry cleaner, is that deductible? No.
Because I can wear them outside of work.
But what about the special stuff?
Special stuff you get to pay for laundering it and taking care of it. Gifts, severely limit gifts, up to $25 per donee per year. So you guys are all my clients, and I buy you all $150 fruit baskets for Christmas. First off, you're super psyched. I can only take $25 for each.
Yeah,
There better be some mangoes in that baby. Plus cost of wrapping and shipping, husband and wife equal one donee, and there's no limit for small business gifts up to $4. These are just the cheap plastic tchotchkes you get from China, you know. Key rings with my real estate name imprinted on it. Everyone's really jazzed for those. Okay, that's limitless.
Now I know why my old boss bought it.
Okay, and you can never deduct a gift to your supervisor.
So I don't understand this. So if you own a business,
Yes.
and let's say hats, okay, so you have business hats. Can you give hats to
Everybody.
25 people?
Everybody. I go sit at Karis Park.
$25 per person?
No, I paid up to, I paid $3.89 for them, and I bought 2,000 of them, right? So that's what, $8,000? And I go sit at Karis Park during an out to dinner, and I hand everybody a hat that says Lisa Swallow CPA. I can deduct the whole $8,000.
I think you should do that now.
I really
I
do.
can picture it.
So you can only deduct the cost of the goods that you give out,
Yes,
not
but
the
because they cost me under $4 each,
Oh,
limitless. If I paid $8 each for them, I could only write off up to $4 each. So that's those small little tchotchke gifts, pretty much limitless, because that's really advertising. It's not really a gift, it's advertising.
Do you write it off as advertising then?
I would write it off as advertising. And I'll tell you something else that I was taught early on in my tax practice, and I don't know if it's a completely above board thing or not, but if you do something like I'm a member of the Sustainable Business Council, and I am on their website and blah, 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 and I have to pay a couple $100 a year to be a member of the Sustainable Business Council. And of course I do that because I hope to get clients that have value congruency with me, right? We shop amongst each other because we're value aligned. I write that off as a sponsorship, which goes straight to my Schedule C, which reduces my self-employment income. So, is that completely above board? I don't know. But I do it. Substantiation requirement. What do you have to have written proof of? Okay, bad debts. Let's see. Where is that on my tax return?
That's a great question. That's a great question.
Where is it?
Couldn't find it.
I put on the Schedule C and other, I wasn't sure where it would go.
Yeah, yeah, I'm probably gonna either reduce my gross receipts or put it under other, but we need to talk about this. This is kind of a complex area. So, if I'm a cash basis taxpayer, will I ever have bad debt expense? Teresa, what do you think? If I'm cash basis. So if I'm cash basis, when do I book my revenue? Cash basis. Yeah, when you get cash.
Hey, money, money, money.
So you're a dentist. In the old days, you go to the dentist and they bill you. You don't get out the front door of a dentist or a vet without paying that, do you? But cash basis taxpayers can't have bad debt because you don't book revenue until it's paid. Okay? The only, and I've had people say, you can't have bad debt if you're cash basis. If you're an accrual basis accountant or taxpayer, when do you book your revenue? When it's earned. So I do the work for you, I debit AR, I credit revenue, and I go on down the road, and then you say, I'm not going to pay you. Now I have a bad debt because I've booked the revenue that it goes against. You can't take bad debt against revenue that you haven't booked yet. So with the cash basis factor, it doesn't exist. The accrual basis can take it. The IRS watches bad debts, and they will require proof of worthlessness. They're segregated into two categories, business and non-business. Business is just what I described. I lay asphalt for a living. I don't know if anybody here has ever priced out asphalt. Holy crap, we just had our driveway done. I felt choked. Like, what is it, gold inlay? Wow. Whew. They came and did a large dollar job and said, I'll send you a bill next week. Okay. So I'm sure that was at the end of the month that they booked that revenue in August because they wanted to show that revenue in August. They earned it in August, but I didn't pay until September. What if they came over, sent me the invoice, and I didn't pay them, and then they came back a week later, and I'm like, oh, wow, dude, I really don't have that kind of money. I don't know what I was thinking. Okay, that's a business bad debt. It arises from a trade or business, and it's going to go straight to their Schedule C. Schedule C, because they're self-employed. It's going to have to either go, that's kind of funny. I don't really know. I have so few of these. I think I'm either going to put it on returns and allowances, line 2. That's probably exactly where I'm going to put it, and reduce my receipts. So he's booked the whatever, 10 grand or 5 grand, let's say, and then I don't pay him. He says it's going to be 5 grand minus 5 grand equals 0. Right?
What about in the case where maybe we're due to off, did you guys write that off?
No, because I hadn't recorded revenue. She had all of our tenants' deposits, and she declared bankruptcy after she'd gotten all the checks for March. So she had the deposits plus all the rent.
So if you're in business or potential about not paying, it's better to have a full revenue.
Well, it's really 6 of one, half dozen of another. Revenue minus bad debts equals 0. Or just, I never book anything, 0. Right? I never booked the revenue, I never got the money, 0. Or I booked the revenue minus bad debt expense equals 0.
If you have a bad debt and you sell it to a collection agency, do you still get to take it as a bad debt and write it off?
You get to take the percentage that was discounted. Okay, let's take a look at what we do with non-business bad debts. Non-business bad debts is my nephew says, I'm clean this time. Honest to God, I am. Please borrow me $2 grand to get my tools back so I can go back to work. Not a made-up story. Okay. Here you go. Here's the $2 grand. Turns out, not so clean as clean might sound. Never get it back. What do I do with it? Schedule D. It's a non-business bad debt. I never intended to enter into a business relationship with him. It was just trying to give the kid a head up.
Do you have to have like a receipt or some sort of proof of check written?
You do. We signed a note.
Oh,
Okay? So let's look at a Schedule D because you are going to have one of these and figure out how to handle this. Schedule D. Probably going to need to go to the back of our book. Page D19. So you're going to say, well, that doesn't say D. No, it's a schedule that flows into the D. So there's a D on page 917, and then there's a sale and disposition of capital assets on a D19. Okay, line 1, description of property, non-business bad debt. D19, non-business bad debt. Date acquired was the date that really I acquired. What is the capital asset I acquired when I lent him $2,000? I acquired a note. I acquired a notes receivable from him. Date acquired, whatever, September 1st, 2012. Date sold or disposed is the date that it becomes totally worthless. That's the date, that frankly he was arrested. Okay. That's it. Probably not getting my $2,000 back. But you have to have something that shows total worthlessness. Arrest, bankruptcy, loss of job, something that's indicative that that's that. Proceeds, sales price. How much did I get to sell the note for? 0. What was my cost basis in it? $2,000. Therefore, line H, loss of $2,000.
Do you do this anytime when we itemize or?
Capital losses flow where? And you guys have seen capital gains and losses. Where do they flow on your 1040? Where do these things end up on your 1040? Yeah, in the income section on line what?
Oh, right, 13, 14.
Capital gains and losses, line whatever that is, probably 13. How much can I take a year in capital loss? $3,000. I can carry it over indefinitely. Until you've used it all. Yep. Sure. Not really. Keiko's a dentist. She loans her friend Lars $20,000 to start an upholstery business. Subsequently, Lars cannot repay Keiko. Is this a business or a non-business bad debt? And how much may Keiko deduct in the current year? But she lent it to him to start a business. Yeah, it was. Which is a capital loss. It's a capital loss limited to $3,000. Okay, put on your thinking cap here. This one's got some depth to it. Office and home. What the heck's an office and home? Right? I've got one. It's actually a 3rd or 4th bedroom, but you have to, if the IRS, whatever, come into my house, I would have to, and it looks like an office. It's got a couch, it's got a table, it's got lighting to do business on, it's got cabinets, it's got a computer, it's got file cabinets. It looks like an office. They don't need to know that the couch pulls off. I throw my family in there when they're visiting, right? Because then it would be non-deductible. It's got to be used exclusively as a principal place of business. If you're an employee and you have an office at your place of employment, you cannot take a home office. So say my niece, back to my niece, she's a teacher. She comes home at the end of the day, and she's got a huge room just full of arts and crafts. That's where she makes the pig snuffs and the donkey ears and, pastes the sparkles on the little thing. Oh, she's an awesome teacher. And I will tell you, the most exhausting couple hours I've ever spent in my life is watching her with 22 kindergartners, half of who don't speak English and 6 of whom are deaf. It's like, wow, she is so talented. It makes my job look so easy. And they make nothing. Anyway. Yeah, figures and donkey nuts, yes. She can't take off we call it the purple room in her house with all the supplies and art and craft because she's got an office at school. So you have to be self-employed, or if you're an employee but you don't have an office at your place of business. Like a lot of times sales reps are employees, but because they travel so much, they don't really have a business. Sure. Home office, absolutely. Good deduction. If you're an employee, it goes to your schedule, what? A, employee business expense. If you're self-employed, let's see where it goes on a C. And I will tell you it's all the way at the bottom. Line 30 on your Schedule C. And it tells you that you have to fill out form what? Well, if you're simplified, that's really easy. But if you're going to get a little bit more, probably more deduction, what do you have to fill out? An 8829. They do make you measure your square footage. So let's turn to 3-63 and look at an 8829. This is where you accumulate the data if you're not using the simplified method. This is where you're accumulating the data to write off the expenses for your home. You get it. If you use it as a regular place to manage business or meet with clients and patients. So I'm a counselor, and I have my patients come, and I've got a room set up to see them in my home. Absolutely. My office is a separate structure. I have some clients that own a construction business. They built a whole little shed office space on their property at Patty Canyon, and it's got a separate electric meter, and, you know, okay, we take all that. Or it's something that I use for inventory storage. So like I've got clients that make this, these herbal remedies, vitamin remedies for breast cancer survivors, and they bought this huge warehouse and it's filled with inventory. So we write off the cost of that, obviously. Okay, here's where it gets a little bit complicated, so stick with me. You can't create a loss from your office and home unless that loss is attributable to the portion that's mortgage interest and property taxes. What am I saying? Let's just, for giggles, on the board, well, let me read through this and then I'll give you an example. So rule number 1 is my office and home can never throw me into a loss. So let's see, back to the example. I'm a counselor. I just started out. I did 20 grand in billings. And I had to do all this training and hire somebody to transcribe all my notes, and that cost $18,000. So now I've got net income of what? Well, 20 minus 18, 2. And then I do all my office and home calculations, and that's a $5,000 write-off. In general, can I take that? It says, yes, I can take 2 of it. Office and home deduction cannot be used to create a loss. Oh, but your question's going to be, of that $5,000, how much of it is mortgage interest and property taxes? If that throws you into a loss, you can take it. Why?
You're already there.
What? Yeah, you're already there, but they would be going on your what if they weren't on your OIH schedule? Your what? Your A. They'd be going on my A as itemized deductions, property taxes and mortgage interest. So they're saying you'd be taking them anyways over there. You're pushing them over to your C because you always wanted to decrease your what? Self-employment income. So I want to push as much of my mortgage interest and my property taxes as I can to my office and home because that drops my SE tax. Okay. Blah, blah, blah. Office and home, if I only can take 2 of it, and I lost the 3 of it because it's not mortgage interest or taxes, I'm a renter, and you can take OIH if you're a renter. Then I can take that forward to subsequent years. So say I'm a renter, and that $5,000, we just said, okay, so it's not attributable to mortgage interest or property taxes. I can take 2 of the 5. That other $3,000 I can carry forward to subsequent years. Office and home carry forward, just like a capital loss carry forward. What's included in the cost of OIH? rent, homeowners insurance, repairs, cleaning, gardening. Absolutely, if people are coming to my home office, the cost, like your landscaping, your snow removal, your new furnace, I mean, anything that keeps your house going because your business is in your home.
Do you get a percent of your electric?
You're sure, percentage of all your utilities, you bet. I don't depreciate myself or my clients' OIH, and this is a little above our scope, but when you sell your house, I don't want to pay any tax on it. And if I've taken a portion for OIH, I'm going to have to recapture that. I don't want to do that. Let's take a look. How do we do it? There's two categories. Well, first off, somebody said you got to measure your house, right? So my home office is 200 square feet. My house is 2,000 square feet. So I get 10% of all those expenses I was just telling you about. 10% of my electricity, 10% of my sewer, 10% of my landscaping costs, 10% of my property taxes, blah, blah, blah. There's two columns on your 8829. Find them. One is a direct column and one is an indirect column. Yep. Part 2, figure your allowable deduction. Part 1, you do the percentage. And there's some special stuff for daycares, but we're not going to be doing that. Direct and indirect. Direct expenses are those items, and only those items. You'll have very few things in that column. Make a note of that. Very few things are direct expenses. They are things that only happened in your home office. So you got a 2,000 square foot house, but this thing only happened in your office. What's an example of something that would be a direct expense? Your computer's going to go straight to supplies on your Schedule C.
You have to read the carpet.
Perfect. I put in new carpet, but only in my home office. If I carpet my whole house, I take 10% of it. If I just throw in a new carpet, 4 years ago we put a new window in my office. Direct expense. Only in the office. Had custom cabinetry put in. Direct expense. Only in the office. Put a new roof on my house. It's what? It's indirect. Yeah, I only get 10% of that. Everything in the indirect column, you have to multiply by the percentage of use. So my sewer, and my garbage, and my water, and my electricity, and my repairs and maintenance, and my cleaning lady. I wish I had a cleaning lady, but I don't. All those things are times 10%. Those go in the indirect column. No, that's just an example I just made up. You say your house is 2,000 square feet, your office is 20 by 10, so it takes up 10% of the house. And you can see when you line those all out, when you get down to line 23, it tells you to multiply column B by line 7. So if you're on row 23, it tells you, hey, multiply that by line 7. D or 363.
Okay, so you do all the totals for everything.
You do, and I'll tell you right now, you guys, you put in, this will cause you consternation. You put in your big stuff like property taxes and mortgage interest, all gets entered into the 8829. And it'll take the 10% to the 8829 and throw the other 90% to your what? Hey. It will take it and throw, so I put in mortgage interest, 13,000 under the indirect column on my 8829. And it'll multiply it by my business percentage on line 7 and take the balance to my Schedule A. Software does that. Do not try and manipulate that. When you put in something like insurance, $1,326 is my homeowner's insurance. It's gonna take 10% of the 8829, and what's it gonna do with the other 90%? Really? Do I get to deduct my personal homeowner's insurance? Only the portion. I put in my electric bill, $3,600 for the year. 10% to the 8829, other 90% personal, non-deductible. Okay, so that's just what this says. Direct is work done directly on the home office. For example, new cabinets. Indirect is applicable to the entire house and allocable to OIH. You put the total numbers in the input screen for the 8829, and it does all the throwing the numbers. When you do your manual recap, are you going to have to do that on some little schedule on a piece of scratch paper? Sure, because you can't figure out whether you have standard or itemized until you see how much your itemized is, right? Okay. With all that said, there's now a simplified method of $5 a square foot.
That only has to
300, is that the number? Oh yeah, 300 times 5, 15, yep. So if $5 a square foot works for you, whole lot easier than going through an 8829. This form mystified people. Well, you can just do the numbers. You add up all your indirect expenses and multiply it by 10%. Well, the example I gave you, I had a 200 square foot office. So the max I would be able to take is a grand, right? 200 times 5.
Okay, so then the simplified method is just square footage for the office.
Yes, ma'am.
So if you had a 500
You can still, under the simplified, only take 15, so of course you're going to go actual. The other thing is, though, you're going to need to be real careful if you're saying I got an 1,800 square foot house and I use 500 of it for an office. Really?
I know like guys, they own a house, they have a studio in their basement.
Sure.
Whole studio.
Sure.
Studio / rehearsal.
Yeah. Musicians, I would say you can make a pretty strong case.
like photographers at studios.
Absolutely. I've got a videographer for a client, and yeah, they've got a 3-story, pretty good size home, probably 4,000 square foot home. Yeah, whole basement, 1,500 feet is videography studio. But I'm just saying, like, an accountant doesn't need a 500 square foot office out of 1,800 square foot of livable space. If you can make a good, and that's where, let me just point something out while we're looking at a Schedule C. Weren't we just doing that? Although I didn't get my finger on the page. 3-9. Where all of these red audit flags come from is box B on your Schedule C, up on the top right, way top right. Business code. I'm a hairdresser and I have a home office. Yeah, probably need a lot of room. You know, I'm an accountant, probably not. And that gets pulled, the audit parameters gets pulled from that business code. So like his example of studio musicians, absolutely. Okay, we've gone through this. Okay, let's look at Kitty. Kitty's a part-time cartographer. What do cartographers do? They make maps. She maintains an office in her home where she reads electronic maps and keeps client records. She allocates $12,000 in mortgage interest and taxes to her OIH. Now, what does that mean when I said this? She allocates $12,000. Does that mean that's the total, or does that mean that's the part of her? So she's got obviously a big ass house. Yeah, she pays a lot of interest. She allocates $12,000 and collects $11,000 in fees. Assuming no other business expenses, what is her current year OIH deduction? So just stop there. How much is she going to take for OIH in that fact set? How much? Can she take it into a loss? Except for if it's allocable to what? Interest and taxes, is it? Yeah, so how much can she take? The full 12. In the first example, she may deduct the entire 12,000 because it's all interest and taxes. In the second example, I said, and she also allocated $2,500 of maintenance and utilities to her office and home. She doesn't use the simplified method. What happens in the second example? How much does she get to take? Now she's got $14,500, right? She did. Her mortgage and taxes took her into a loss. So can she deepen that loss? Nope.
Only if it was,
refundable to her, like if she keeps going down, elevating it forward.
It's not so much refundable as this is going to be the carry forward.
the exception would be that it was, that she was already supposed to pay that it was, or she did the mortgage.
Super great example. Let's take a look at that. Let's see. Why don't you try this example? Same thing, so write this in your notes. Revenue of 81,000. Reading that. So she bills 81,000. She has COGS of 68, right? So she's got all the material. There is no crying in baseball or accounting. Okay. Her operating expenses are 6. How much was COGS? 78? 68. 68. And that was 81. 74.7. Okay, so then her office and home is 8,000. And it's comprised 74 and 82, 18,000. It's comprised 6,000 of mortgage interest and taxes. And 12,000 of repairs and maintenance. My question is, what's her OIH deduction? Repairs and maintenance. So obviously she doesn't big like the sewer system. So first off, you need to figure out what? And a net income am I starting with, right? And then I want you to figure out how much you think of the OIH you're going to be able to take. So I've got net income of $7,000 before OIH. Can you show me which line item that number would go on your Schedule C? No,
28.
close.
What was the cost of fixing?
68.
Oh, thousand. I had 60.
Tentative profit or loss, right? Everything, all my revenue minus all my expenses, except for I haven't done the OIH yet. What does the rule say? Can I take the full 18,000? Why not? Here's what you have to do. We have to unpackage it. I compare these two numbers and I'm like, oh, I'd like to take that 18 so I have a negative 11 to throw against my spouse's W-2, but I can't. I've got 7,000. I know I can take all my what? Regardless of whether it throws me into a loss or not. I can take all my mortgage interest and taxes. I can take all my mortgage interest or all my office and home that's comprised of mortgage interest and taxes. Then I've still got another 12 grand. How much of that can I take? 1,000. I can just get myself even.
But the 11 will carry over to next year, right?
Yep.
Can it just keep carrying over? What if you can only use 5 of it the next year? You carry over?
Absolutely. When people are getting in this situation, unless their business is going to increase capacity a lot, I mean, I keep track of this, obviously, the software keeps track of it, and I keep a little worksheet from my tax files, but rarely do they eat it up.
You put the full 12,000 in your software.
I put the full 18,000 in my software.
Right, but you separated 6 to 12 in the software?
Your input screen's going to look just like an 8829. It's going to have mortgage interest, property taxes, rent, repairs and mortgage.
And so next year, it's going to say, oh, you pull that over.
Absolutely. Okay, good job.
And what was the thousand?
The 1,000 I pulled out of the 12 to take me exactly to 0.
The 6 will go on your schedule A, and the 1,000 will go on your.
Because 1,000 is the maximum.
The 1,000 gets me to 0, and my office and home can't throw me into a loss unless it's from mortgage interest and taxes.
Pull out enough to be.
Exactly. And now I have an $11,000 carry forward. And no, 6,000 isn't going to my A.
The 6,000 stays on your schedule.
6,000 is going to my schedule 8829. There's going to be some bigger number that goes to my A because this is only a portion of it. No self-employment tax. No income tax. No loss to go against my partner's W-2 because without the office and home, I didn't generate a loss. I really had net income. They don't want that to throw me into a loss that goes against my partner's income. I'm going to just say about 2 words on NOLs. We've been lecturing here for 90 minutes. I'm tired, you're tired. And these are quite complex, and there's different rules for Montana versus Fed. But just stick with me here and try and kind of see the theory behind it. The theory behind it is, if I've got, say, 4 years, and I make, let's just see if I can keep this easy, 100,000 a year for 5 years of taxable income from my business. Say I'm a security specialist. Actually, one of my kids' best friends went in the military right after high school, and now he's a personal assistant to a well-known sports figure. Big, buff kid. Well, he's not a kid anymore. Yes, he is. 26. Still a kid. So he makes this a year. And he's going to pay tax on that, right? So, and, hefty tax. Compare that to I start up a business and I make First off, tell me how much this person made over 5 years. That's not right. $625. How much income did he make over 5 years? You can do this. Yes, you can. Oh, yes, you can. You guys, you're accountants. You need to be able to look at numbers like this and package them together in your head. 500,000, which is just what the guy made in number one, right? Over 5 years. Right. Except for without, and what we're studying about right now, I'm talking about something called NOLs, net operating losses. NOLs, net operating losses. If NOL law didn't exist, which I'm going to show you in just a second, what would be unfair about this situation? They both made $500,000 over 5 years. Exactly. Dude number one paid $500,000, or paid taxes on $500,000. Dude number two paid taxes on $175,000, $800,000. Is that fair? What am I saying? You add up guy number one, $500,000. You add up guy number two over 5 years, $500,000. But without NOL law, he pays tax on 25, and then 25, and then 125, and then 625. So he's paying tax on 800,000. Yeah, but he's paying tax on 800,000. The first guy's only paying tax on 5. So here's what NOL says. In order to equalize these situations, you can carry your net operating loss back 2 years and forward 20. So I pay on 25, I pay on 25, and then I have this huge loss. Oh my God. I go back and I amend these 2 years. I amend 2012 and 2013. I carry my loss backwards.
Do you have to go back?
No, you don't. You can choose to only go forward. Or 2 back, 20 forward. And that's a real good point. But you can't project into the future. I only know what happened behind me. So I go back, I amend these, and I get a refund check, don't I? For 2012 and 2013. How much of my NOL do I have left? $250. I had 300. I used 25. I used another 25. I got 250 left. What am I going to do when I file my 2015 tax return? What's my taxable income this year? 0. How much do I have to carry forward to 2016? 175, 125, right? Not calibrated. This should say minus 125. Taxable income, what? 500,000. So we're both treated the same, even though I went like this and you just went like this. We pay the same tax over a 5-year period, or 10, or 20. I have done these twice in the 20-odd years I've been practicing. So they're not common. They are a royal pain in the ass. And then Montana has all sorts of adjustments. They suck. But so are you going to do them? No. Do you need to understand why we have the law? Yeah.
How long was the cutoff on amending the tax return?
3 years. So first you carry it back 2 years and then forward 20. You file amendments for the prior years if you're going back. Or you can do this thing called a 1045, which is based for NOLs. It's a quick claim refund form. Yes, they are a pain, and if people want me to amend their tax returns, I tell them it's going to cost. You're going to pay me for my time because it's a pain in the ass, and again, Montana's different from Fed. And just what Jess asked, you can make an irrevocable election to forego the carryback. What do all those big words strung together mean?
You can choose not to carry it back.
Yep. Yep. You can say, oh, like if I look back on those 2 prior years, 25 grand, pretty low taxable income, low tax rate. And if I think my business that I just chunked all that money into is going to take off, which it did by that math I put up there, I'm going to want to carry it forward and bring down those higher dollars of taxable income. But that's a crap shot because, you don't have the crystal ball. But you can make an irrevocable election, then you attach this thing to your tax return that says I make an irrevocable election. Hobby losses, we've talked about, you can only deduct hobby losses up to hobby income. And this is the number the IRS is going to look at if you generated a profit 3 out of 5 years. I didn't mean to draw a line through it. So musicians, photographers, people that do things that easily can be called a hobby, you cannot write off a loss year after year after year. My husband's a surgeon and I sit home and quilt. And every now and then I sell a quilt, but I spend 10 grand a year on quilting supplies. Well, no, that's not going to work. That's really a hobby. 2 out of 7 years if you're involved with horses. This was obviously the equine lobby. Where does it go? I think we looked at this, right? Hobby income goes on that other income line on your 1040. Hobby losses. Where do hobby expenses go on your Schedule A? All right. Let's take a look at manual recap number 6. If I were you, some of you look like, oh my God, I'm completely overwhelmed by all this. You need to go home and look at these slides slowly and ingest this material. I can guarantee you it's not going to slow down. This is just it. Okay, so let's look at manual recap 6. You need to let me know.
I still turn in my 5 right this.
One more time.
I still turn in my 5.
Yeah.
Okay. I think if
I mean, you need to go see Tom, the high-tech guy.
you might be able to save it on your SLE or on my flash drive, maybe on. I wonder if I could transfer it back to that computer.
You can transfer anything on your disk, on your
my hard drive.
yes, and not to come down on you in particular, but because of our time is so precious, this stuff's got to be solved outside of class time. Okay. All right. Manual recap number 6. We kind of got a lot going on, right, with this tax return. Tell me what were some of the things that you thought were interesting or that you struggled with. Or maybe nothing. Piece of cake.
So for his home business expense, we'd be better off using 8829.
What are you at, 6? Okay.
He uses 700 square feet in his home business.
Yeah, and he's going to get by with that because he's probably storing clubs and mats and yeah. So he's going to get away with that because he's probably got inventory.
So we want to use 8829.
Yeah. Perry's question is he uses 700 square feet. Are we going to want to go 8829 or simplified? probably because he's also storing inventory and it's a big space, he's gonna wanna use the 8829.
So, and then all of his residential expenses.
This is exactly what I was talking, these are the numbers, you guys, that's going straight into the 8829. And the software is gonna throw the portion of some of those to the hay. Yes, but when you do your recap, you've got to figure out what percentage of the house is business use, what percentage of the house is personal, and then the percentage that's personal times these guys has got to go into your itemized deduction calc. Because you're going to figure out whether he goes standard or itemized, right?
So after our 8829 is done, then we figure out whether it's itemized.
Yes. Because you know he's going to get the 8829 on a C. But at some point, you got to say, am I giving him the, is he married or single? Am I going to go the 6,200 or do my itemized deductions, are they greater than that? And when you make that calculation, don't forget, he paid estimated SIT. And that's an itemized deduction, isn't it?
At that point, you decide.
In December of 2014. So how do we treat SIT on an A, and how do we treat FIT on a 2A? They're deductions, they're itemized deductions. But you only get up to, I think, is it $5,000 to fit for Montana? $5,000 per person. But SIT is unlimited. If I'm super high income and I pay $50,000 a year in SIT, that is all a deduction on my Schedule A.
So, does that go on your
Nope, it's part of your itemized deduction calc. And if you look up on your little itemized deduction, I say, work that out on scratch paper using Schedule A as a guide. Yes, ma'am.
This is page 6, do you want us to include an 8829 in the schedule or
You have to. You have to. That's sure.
It will automatically.
Sure.
like if we were using one for government?
Oh, if you want to turn in your handmade notes, that's fine, but absolutely. That's where you're going to be doing all your input is into the C. I gotta look that up just a sec. Ouch. Cases 6, 7, and 8 are due next Tuesday.
Yeah, which they're
So cases 6, 7, and 8 are due next Tuesday. I wanted you to get a good jump on 6, and then we'll spend the rest of the week on 7 and 8. Tuesday. And then that Thursday, we're gonna have our first test. So I'm gonna have to turn your tax returns around in 48 hours. Homework 6, 7, and 8 is due on the 29th. Actually, I made notes that they're due, that they're due on September 30th by 2 o'clock. I'm giving you an extra day. So you don't need to have them to me until that Wednesday afternoon, and then I'll turn them around by Thursday. No, you have an extra day. Maybe we should just talk about the next 3 days. So when you come to class on Thursday, you should have your manual recaps for 7 and 8 due as well. And then we'll spend all day on the computer on 6, 7, and 8. So really, we're going to have 2 hours on Thursday and 1.5 hours next Tuesday on these tax returns. So I know it's a lot, but you're going to have a lot of in-class time. You guys read all this? So Thursday, we're going to have all day, and I'll just work one-on-one with you. I'm just at your disposal to help you on the software. Tuesday, basically same. We'll go through the homework in a half hour, and then spend the whole rest of the day working on the software. Then you've got by that Wednesday to get the cases to me in my box by 2 o'clock. I'll pull them out of the box at 2, take them home, grade them, bring them back to you for the exam on Thursday. Okay, let's spend the next 13 minutes on case 6. And yes, I do have a heart.
In this class, we're clearing that up. In this class, managerial 29 questions.
I always have a heart, Gretchen. Put them together. Give them to me together. No, 4 and 5. Or 5 and 6. 4 and 5. So you printed both of them now?
I printed 4 originally, I just couldn't get 5 to print, and then I had to switch to computers.
But you got it?
Yeah, I just saved it to my student hard drive and then printed it off.
Beautiful. I'll be right back.
that's what he does. He does it. We don't see that.
Well, why does he have 5,000?
Which one, my expenses?
That's what he does.
I don't really think. Why? 8465.
Ew, I know, because you can only claim up to 1,000. And then
Oh. Well, sure, if you want to add into the column.
deductible margin is like
$12,490?
Yay, okay.
Now we're good. Makes you
Everything else is okay.
Right? You get to use it for induction for API and for.
Oh, now, yeah.
Yeah, I'm just rolling through here.
Induction or API, that's all you can afford. It's really pretty.
You've got to do your seat. I mean, you've got to get your, you have to do your OIH company.
Yeah.
So what I would just do is set up 2 columns.
So there's 2 different mortgages.
Yeah.
Is there caps at that?
No, it's not really a cap. It's just it's 2 input fields on the software, and sometimes mortgagors send a 1098 and some don't. If I was doing case 6, and I got some questions between OIH and A, what's getting thrown between the OIH and the Schedule A? Mortgage interest and property tax. And there was a question, there's 2 kinds of mortgage interest, on a 1098, not on a 1098. That's just for software purposes, but they're treated exactly the same.
So when it goes on your 8829, it all goes on deductible numbers?
It does, but when you go into the input stuff, you'll see that there's different screens to get to that one field. So how do I figure out what portion goes on my OIH? How big's the house? How big? Oh, you have to go to 2 decimal places, but how big's the house?
2,500 square feet.
Yeah,
700.
exactly? It's not exactly. Is it? Okay. So you always go out 4 decimal places. Here it's obviously even, so it's 28%. So then I would write down, and can you, let's see, Melanie, can you remind me, there's 2 categories of expenses for an 8829, those 2 columns we looked at? What were they? Anybody remember? Direct and indirect, right? It's okay. So just stick with me here. Which ones do I use the percentage for, direct or indirect? All the indirect expenses, because they apply to the whole house. Do direct expenses get multiplied by the 28%?
No.
No. Does a part of them go to the A? No. So that's easy. Do all the indirect expenses partially go to the A and partially to the OIH? Really? Like my utilities, part of that goes to my A? That's just personal and non-deductible.
Except for 20%.
Right. So my point is, when you list out each of your indirect expenses, do the math here. Tell me how much goes here and how much goes here. Some of them, it might go here and none goes there because it's personal non-deductible. You with me? So then you're going to be able to add up everything that's in the OIH column. And that is your line, whatever that is, 29 on your Schedule C. That's really where you have to start because you can't do the C till you've done the 8829, right? And you can't do itemized versus standard till you get this number. Does that help you get started, John? Yeah, that's probably.
And the only reason you would ever put anything on this
Yeah, but you're thinking about when you do your schedule.
oh, after, well, I'm just trying to let you know where you can't go under the federal. I was just walking around. Yeah, so what is it? I'll be good at 8 morning period. Oh, that's nice. That's
So good, I'm not also,
well, yes, I did. I think we'll be able to figure out some stuff together in the morning. Don't go too far without me. Like, and you can.
well, I've got to prepare for my
Financial planning, okay. I'll be here at 8:05, you know. Right. I'll be here, I'm here every morning at 8:05, whatever needs to be done. Yeah, my brain is shutting down. What did you say? 5 guys.
yeah, or companies.
Right.
Like Merrill Lynch laundered money.
My Lehman Brothers. rendering on this from now on the goal. Make an effective study.
Yeah, can we make copies?
I mean, I had, well, we didn't talk now, but we were gonna, I might even have to talk about this. I had connected to want to do a suggestion that was about.
It's probably going to be a process.
Okay, so how do you make the cost? Look, there's two. There is a copy. They're not gonna. Is it a copy?
Well, it went,
Okay, so what's, I mean, I guess, basically, you need to kind of keep moving ahead, because I've got a list of people that have taken
here you go.
prior
So I'm
years,
gonna separate these.
other directors.
It's the same copy, this one's.
But I guess I need a feel from you, if you feel like you can do 90 hours between now and the end of the semester, and finish the homework and jobs. So you've been getting time for your problem now. That's enough. That's all.
Do you want this one or this one?
Yeah, I would like to know that everybody's
Right, exactly.
like this. I don't think we're gonna be able to get. We might get through it. I have no idea what I'm saying. Okay. So, do you want me?
I, really struggle on,
So, is your resume and cover letter? I need you to generate a list of kinds of Alright, I'm out. You need an air conditioning, plumbing, or fashion? I'm sure that a medical field, I need some fields are, you know, where you feel you look from.
Also, we're going to use constantly. Well, because I did the discount rate already and you're not supposed to.
Would be a natural.
no, I'm very positive.
Yeah, and then you do them all, because there's a line where you actually do them all.
Yeah, line of 7, it's like this one.
So,
Oh, good. Thanks.
what else?
go back and